That rally, none of that was because of earnings growth. That was putting in trillions and trillions and trillions of dollars called QE money. Trillions. They kept printing money and printing money. And every time they print that money, inflation pushes up the cost of everything. Gasoline, food, chicken, beef, everything. All that printing and all that buying treasuries to drop interest rates down to zero so that the companies can go in and purchase their own stock back because they got free interest-free loans, for God's sake. That's what pushed the market up. Now, they keep saying to me, well, when's this crash going to happen? When's this crash going to happen? It's different this time, Phil. It's not going to happen. Oh, yes, it is. We're closer than we ever were. It's going to happen. It's not going to. And they say, what's different this time? Well, how's it different this time? Let's go back to 2017 to 2018. When we got to 2018, remember what happened? First, Trump gets elected in 2016. He gets inaugurated 2017. He starts talking about all his tax cuts, right? And he's going to get rid of Obamacare and all this. The market starts soaring on the idea we're going to have this tax cut. And with this tremendous tax cut, we're going to have a lot of economic growth. So the market's rallying, and when we got to that 2018, they decided to taper, to raise rates. Because after all, we're going to have this explosive growth because of tax cuts. Well, the bond market was already telling us that's not going to happen. And it didn't happen. The market crashed. When they started to raise rates, and I told you this yesterday, when they started to raise rates in 2018, the market crashed 20%. Boom, went down 20%. And then they started to cut immediately. They started to cut rates immediately to try to get the market going back up again with low rates. Look, what drives the market, okay, is low rates, these yields, not earnings growth. That's gone out the window. As long as they can keep printing money, buying treasury, drop those yields down. But there's a problem with that. You can't keep the yields down. The reason why the market crashed in 2018 when they did a taper, because when you keep trying to push the market up, keeping those yields low, if you don't have real earnings behind you, which we don't, the bond market's going to throw the stock back. In other words, you can't keep pushing up this market with just low interest rates. All of a sudden what happens is the yields will only go up so high and they stop. They stop. They go up so high and they get resistance. There's resistance on top because there's no real growth. There's no from earnings, from business investment, from new productivity and wages and spending. Remember, they got rid of all that. They said, we don't need any of that. We're going to just keep cutting rates and do stock buybacks. Well, when the market rallied in 2018, they tried tapering it, but the yields, when they got to a point of, I think it was around, I can check it here, but I think it was around a yield of 217. I'm sorry. In 217, the yields were around 230 basis points. And then it rallied, right? We had the rally from 217 up to 2018. When it hit 2018, the yields were at 318 basis points. And then they started taper and think it would be okay, but the market crashed because those yields were too high. And the market dropped 20%. Why were the yields too high? Because there's no real earnings growth behind it. Every time a stock moves up, it's not going up because of earnings, it's going up because of stock buybacks. After the market crashed in 2018, yields went back down. They got yields to go back down to 144. Now remember, 2017 was at 230. When it got up to 318, the market dropped in 2018, went down 20%. They get the market rallying again by dropping yields down, by doing, buying treasuries, printing all this money that's causing your gasoline to go up and beef and everything else. 2019, yields are low, 144. Boom! Let's rally the market again. Market goes up, and then we hit 2020. We get to 2020, the yields are about, they're about 155. Too high. So the market went down again. It dropped 30%. So the problem the market's having, and that's why I hate to hear when they say, oh, it's different this time. No, it's not different this time. If you go and you look, it's those low yields that drive the tech stocks. Okay, remember the low, they love low yields. So it's the tech stocks that have been driving the whole stock market since 2008. But the market has always been driven by growth stocks. Growth stocks. Energy. That's a great growth stock. Banks. Value stocks, sorry. Value stocks. Banks. Industrial stocks, like value stocks like Caterpillar and material stocks. And that's what always have grown this country, what's made this country so strong in the market to go up. We have real earnings, is value stocks. Remember, the tech stocks that came in, those are growth stocks. So they decided to take the growth stocks and use that as the catalyst to drive the market up after the market crashed in 2008. And that becomes a problem. You can't keep trying to drive your market with growth stocks. You want those, because you want the value stocks pushing your market up, pushing your economy up. But they didn't care about that. They just wanted a quick buck. They wanted to keep moving this market higher and higher. So the bottom line is, why is it going to be different now? We're setting up exactly where we were in 2020 before the crash and 2018 before the crash. I'll talk more about that when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
Hi, I'm Phil Grandy. Is your business prepared to respond to any emergency in the workplace? Well, you better be. Let over 30 years of law enforcement experience go to work for you. Boyd Investigative Group is here for all your business security needs. I know. I use them. They're terrific. Call today for your free confidential consultation. 941-724-4535. That's 941-724-4535. Or visit them on the website, BoydInvestigativeGroup.com.
License number A1900020.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here. And it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. Welcome back. Are you a fan of the Phil's Gang radio show? Then you should check out philsgang.com or give them a call at 877-600-4264. Now, here's Phil.
Hey, welcome back to Phil's Gang. Join my gang free for 10 days. 877-600-GANG. That's 877-600-GANG. It's free for 10 days. You get my color-coded chart. And the one thing you're going to learn, not only when to buy the stocks, but here's the real important. When do I get out of it? And here's the key. How do I make money when it goes down by shorting the stock? If you don't have time to come to class and learn, even though the classes are also archived, we have a program called our Pro 2 Color-Coded Chart. It's our color-coded chart program. And it works beautiful because what we do is we give to our members, we open up to them our portfolio. And every day, Steve, who's the head of our education department, takes each stock in our portfolio and does a video using the color-coded chart, telling them exactly what to do with the stock. So how can you go wrong? I mean, how can you go wrong? So if you don't have time to learn, or if you just don't want to learn, and we understand a lot of people are tired of going to school, what a beautiful program. And I hear people all the time say this to me. I hear you on the radio, Phil. I'd love to join your gang. I just don't have time. Well, guess what? Now people have time. It only takes a few minutes a night. So if you're following Apple or you're following Microsoft, you're going to know exactly when to add to your position. You're going to know when to take some profits, not all. You're going to know, okay, let's add back on. You're going to know, hey, you know what? It's time to take our profits off and exit. And also, we're going to turn our position so when Apple or Microsoft goes down, we're going to be making money on the way down. If you're not convinced of that in 10 days, I don't know what to do. But this is why people don't make money in the market. 80% don't. Now, let's get back to, I'm going to make a statement today. We're the closest to a stock market crash than we ever been. Now, I'm going to explain to you again why. She said, this lady, earnings growth will drive the market. Earnings growth have not been driving the market since 2008. QE. What is QE? QE prints money. And that's what's been driving the market. Because QE, that money printing, is connected to purchasing treasuries, which is connected to low yields, which is connected to the big 100 tech stocks, the QQQs, which is connected to Microsoft, Apple, Amazon, Nvidia, Facebook, and Netflix, which is connected to the S&P, the market. Those stocks is what drives the market. The environment those stocks need to be in is low rate environment. So they created this environment of low rates called quantitative easing, where they print all this money, which drives up the cost of everything on Main Street, the poor people on Main Street, and those stocks go up. As long as rates are low, those are growth stocks. And that will push those stocks up because those 6 stocks are connected to the S&P, and they drive the S&P. They're the big driver. Just these 6. Do you know every rally, 37% of that rally is because of those 6 stocks? That's why the market's been rallying since 2008. That's how we get our rallies. Now, what the problem with the rallies is they're not created by earnings growth. They're created by this QE of printing money, keeping rates low, and the tech stocks love low rates. They're growth stocks, that's why. But our country wasn't built on growth stocks. Our country was built on value stocks, like GE, all these big companies, big value stocks. Energy, our oil companies, banks. This is what our country was built on. Value. Industrial, Caterpillar, materials. That's what we were built on. That's what drove the economy. But after the 2008 crash, they weren't satisfied with those. And they didn't want to do a recession either. They wanted a quick buck for the top 1%. So they said, screw the growth stocks, the value stocks. We're going to go and take these tech stocks, and we can move them up by keeping rates low. If we keep those yields low, keep buying treasuries, and keep buying treasury trillions of dollars of trade, because all we have to do is print the money, those stocks will take off. Well, when Trump got into office in 2018 or 2016, I'm sorry, the inauguration 2017, by the time 2018 came, he was ready to do that big tax cut. And when he did that big tax cut, he said, this is going to be fantastic. Our economic growth is going to soar. But he didn't remember how the market got from 2008 to where it was in 2018 is not from earnings growth. It was from stock buybacks. So they decided, you know what, we got to clean up a lot of this inflation that we created by printing and printing and printing since 2008 to artificially drive up tech stocks, to push up those tech stocks so we can make a fortune. We better get some of this inflation down. So let's taper. Let's raise rates. Call it taper. They announced it. They started to raise rates. Boom, the market drops 20%. Why? Because, see, yields or interest rates, when the yields start going up, those tech stocks start going down. Yields are bonds. The bond market's never wrong. The bond market's going to say at one point, no more. And they reject it. And so when they reject, the bond market rejects, what happens? The yields start going the wrong way. And tech stocks hates higher yields. So it dropped in 2018. And the same thing happened, and I'll explain that when I get back in 2020. Why don't you join my gang? It's free for 10 days.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now, the worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days. Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now, the worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grandy and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call. 877-600-GANG.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877 877-600-4264.
Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. And that's what it's doing. The economy's going straight down. You know, banks right now, worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
You're not a regular listener to Phil's Gang? What, are you nuts? Listen to Phil Grandy and check out philsgang.com. Now, here's Phil.
And welcome back to my gang. Join my gang. It's free for 10 days. 877-600-GANG. That's 877-600-GANG. So you'll make sure the next time a market either corrects or crashes, you'll be making money on the way down. And you got 10 days to find out if I'm full of crap or not, okay? Because you'll find out when you do go through us in the next 10 days, you say, boy, I wish I did this a long time ago. I no longer have to be fearful. Matter of fact, I'm looking forward to a stock market crash. And remember how the stock market crashes come. And we got one coming. There's no doubt about it. It's 100%. And I'm going to explain why. Because the same reasons that the market rallied, remember, the market rallied 2017 about 30%. And then when it hit 2018, it collapsed. Why did it collapse? Because remember how they drove it up from 2017 to 2018. In fact, from 2008 up to 2018, zero rates pushing up tech stocks, which are growth stocks. They love low yields. But now remember how the market works. The market, okay, works off of value stocks. And value stocks like great big yields. They love high yields. So in 2008, they decided after the crash, we're not going to do a recession. We're not going to clean up our debt, nothing. What we're going to do is turn around and we're going to drive the market with tech stocks instead of the value stocks. See, when you have real earnings growth, and then those value stocks start going up because yields, the interest rates go up. Interest rates going up means great things. Interest rates going up means the economy's doing well. And when interest rates go up, that means companies have real growth, real earnings, real production, productivity. They increase productivity. They keep increasing productivity. They keep doing business investment. The wages increase. Spending increases. And the market keeps going up because the value stocks, remember, they love high rates. And when you have real earnings growth, nobody is turning around and trying to go in and buy treasuries. Who's buying treasuries? Okay, so they turn around and that bond yield keeps going up and up, and the value stocks keep going up and up. The banks, industrial material stocks, and that's how you build. But what we've been doing is building with these same old tech stocks. So they got tired. After the market in 2020, they couldn't go up. The yields can't keep going up. Why can't the yields go up like they do with value stocks? Because tech stocks stop when yields start going up too much. It's like kryptonite to Superman. So then the market drops, and it dropped down 20%. So now they hurry up and they drop the rates again. They get the rates down again, very low. And they drop the rates, the yields. They go and they print money and buy treasuries and get those yields down and get them down from a 318 basis points to 144. Market rallies again, another 30%. Now we're going into 2020. All of a sudden, same thing. When you start out, yeah, your yields are low and everybody's buying tech stocks. But then when everybody starts dumping their bonds to come in and buy tech stocks because they see tech stocks going up, and everybody's been buying tech stocks since 2008. What the problem is, when they sell their bonds to buy the tech stocks, yields start going up. So when the yields in 2014 2020 hit 155 basis points from 144, the market stopped again. So remember, every time when you have a rally, you start out with low yields because they print money to make sure rates are going down, yields are going down. But when everybody gets out of their bonds and say, I want to be in the stocks, the yields start going back up. So when the yields went up in 2018, the market dropped 20%. When the yields went back up in 2020, the market dropped 30%. Here we are again. Yields are back up bigger than ever. We're at 170 basis points. Wait a minute. If the market crashed in 2018, when the yields were 318 points too high, are you kidding me? And if the market crashed again when the yields in 2020 were 155 basis points, we're at 170 basis points. So why are we going to be so lucky for the market not to crash now when yields are too high? Well, why are we going to be so lucky? It crashed when the yields are too high in 2020. 30%, and it crashed in 2018 when yields were too high. So everything's setting up the same way right now, today. And then what happened this week when we came back, what happened? We had that big drop in the market. Boom! Why? Because there was from the Fed said in their minutes of meeting, you know what? We decided to speed up and run our yields back up. We decided to raise rates. So they're going to sell treasuries instead of buy them. That's exactly what they did in 2018. That's called tapering. They will sell the treasuries they have on their balance sheet. And when they sell those treasuries, what happens? Yields go up. And if you don't have real earnings, then the bond market doesn't play along and you go into a crash. Remember what earnings are. Real earnings growth. When you have good bond yields, okay, when yields are going up, they're strong. That means value stocks are doing great. Energy, banks, industrial materials. Remember, they replaced those with the tech stocks. Okay, so they get quick money, get this market rallying. But the market will never, ever, ever sustain itself unless you keep printing money to get those rates back down. But when you have good value stocks going up and bond yields going up in these groups of banks, industrial material companies, that's great. But when they've been replaced with QE in 2008, they said, no, let's not do that anymore. Never mind banks and industrials and materials. Never mind high yields. Let's go to QE. Let's print money and bring rates down real low. And what we'll do is we'll buy all those tech stocks. We'll buy Microsoft and Apple and Amazon and NVIDIA and Facebook and Netflix and drive this market up. But every time they drive the market up, you get a correction. And we're at that point again. See, when you go and buy a company, if you're a private company, you go buy and you want to buy a little company in your town, private company, right? You don't care about earnings growth. You don't care about earnings. You just look at the bottom line, right? You just look at the bottom line. What's the company making after all expenses? And I'll buy your business from you. But if you're going to buy stock of a public company, you want earnings. You want real earnings growth. That's what you look for. Okay, because yes, you have profits. They have profits. Public companies have profits like private companies. But they extrapolate that. They have to extrapolate that into what they call a PE ratio. So let's just think about is to justify to you, if you're going to buy a stock for $30, why is it justified? Why is that multiple? If they're saying you got to pay $10 for that stock, you got to pay $1, okay, for every earnings, for every dollar of earnings. They got to justify it. You got to justify it. And that's what creates a good value stock. But that's not what's been happening. They've done away with all that. They don't care about that. So the bottom line is this. We're very, very close right now, because if you just go back, please go and look at a chart and look when we corrected in 2018. Please look when we correct. Don't tell me, 2020 was the pandemic. Give me a break. That was the trigger, but it wasn't the cause. The cause for the crash in 2020 was all this inflation by printing money so they can keep interest rates down to zero, so they can keep pushing up these tech stocks. That was the reason why it crashed. Yes, it was the trigger, but it wasn't the reason. Be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
What, are you nuts? If the stock market can make you so rich, especially Apple and Microsoft and Google and Amazon and the rest, why are so many Americans poor? If the 401k promises you a retirement, then why is it we are in a retirement crisis? Here's the answer. Because 85% of you get out of the market too late. I fixed that with my color-coded chart, which tells you when to buy, when to sell, and when to get out. That's right, when to run like hell. Check it out. You get a free membership and the free color-coded chart for 10 days. Check it out, philsgang.com.
Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com.
Remember, when this market crashed in 2009, it should have never crashed, because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere, because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Did you know breast cancer kills 113 people every day?
That's unacceptable. African American women die from breast cancer nearly 41% more than Caucasian women.
That's unacceptable.
Breast cancer is the leading cause of all cancer deaths for Hispanic women.
Breast cancer is unacceptable.
Together with Susan G. Komen, we're committed to reducing U.S. breast cancer deaths by half.
And we're going to do it by 2026.
Visit Komen.org/unacceptable.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back. And please go to my YouTube channel where I explain, again, on my YouTube channel tonight, why we're going to have the crash. It's free. But I also want you to understand this, that every time this whole market, every time it rallies, it always sells off, doesn't it? That's why it's important for you to learn how to get out of the market before it does that. You got to know, when do I get out of a stock? 80% of you don't. That's why 80% of you lose money. Better is not only get out, but turn around and sell it short. And the reason why, even if they rally it again, it's going to come back and crash, just like it did in 2018, 20%, 2020, 30%. You're going to say, oh, that's all COVID. No, it wasn't all COVID. Because you got to remember, the reason why we always get rallies and then they pull back now is because we got the wrong stocks. They decided in 2008 to drive the tech stocks. They were sexy, they're hot, everybody wanted to buy them, they were going up like crazy, and everybody jumped into those stocks. But the problem with the tech stocks, every time people jump in and start buying the tech stocks, more and more people sell their bonds to get into tech, and the yields go up. And the bond market's not going to accept that, because when yields start going up too much, because it's not real earnings, it's all fake. All those earnings are from stock buybacks. The yields can only go so high, and then they're reflected, and bang, the market comes back. They buy more treasuries, drop yields way down again. They run the tech stocks up again. Then the yield keeps starting to go up, move up, move up, move up. And as soon as it gets to a certain point, the bond market says, stop, stop. The yields are too high. You're driving these stocks up not with value stocks and not with real earnings. You're driving these stocks up because of stock buybacks. Boom, it dropped. Now we just had that rally from 2020 to where we are. Same thing. The yields are way up again. Remember, when we started after the crash of 2020, the yields were only at 55 basis points. We've gone from 55 basis points to 173 basis points or 178 basis points. That's nuts. So every time it does that, the market drops because the bond market will not accept these high yields because the value is not in the stock. These values are fake. Like I said, when you're a private, you buy a public stock from a company, you want to see you got real earnings, real value. And they're not there. Their earnings aren't there. You don't have value. In fact, we have too much debt. That's the problem. And that's another thing. Did you hear what he said, Pisani, about how the consumer's in good shape over these years since 2008? Are you nuts?
The consumer's strong.
Strong. The consumer, think about it. The consumer, he spent less this Christmas than last. Why? Because inflation is a wage cut. They're not strong. What they're spending is borrowed money because rates were low. They're turning around borrowing on their homes again, refinancing their homes. Take consumer spending. The run rate in consumer spending is 28.3% faster than wage income. There's no big wage income. Consumer debt is rising 31.6% faster than the economy's growing. Our debt to our economic growth, our ratio, we need to be at 120. I mean, we're at 125, a ratio of 120. We need to be at 65. This is crazy. This is nuts. In the past 12 months, 24% of the consumers are either late or missed the payment completely. And they're very extreme. 48% of consumers are very, very concerned about all these prices going up. But why do prices go up? Because every time they want to run up Facebook or Amazon or Google, what do? They got to go print money and buy treasuries to drive the yield back down. I mean, here, the example is perfect right here. The 2017 rally, okay, from 2017 to 2018, rallied up to 318 basis points. They had to drive it, and then the market crashed, and they went and bought bonds and treasuries and drove it down to 144. Then they started another rally. With what stocks? Not growth. I mean, not value, growth stocks, the tech stocks. They had a big rally again, starts rallying. It was at 144, starts climbing and climbing. The yield climbs. Why does the yield climb? Because everybody gets out of the bonds and they want to get in on the parade. It's like a herd of cattle. They're all jumping in, buying Facebook and everything else. And then all of a sudden the yields from 144 is back up to 155. Boom! Yields are too high. They can't keep going. Why can't they keep going? Because the stocks, there's no value to them. It's all fake. It's all stock buybacks. There's no real value. Big institutions that buy these stocks, they're not stupid. So they sell them. And then boom, the market goes back down. Once we hit 140, then it drops all the way down. So then what do? They drop they go in, buy more treasury, drop the yields again. The market rallies again from 2019 up to 2020. So it goes from 144 to 155. Get at 155, the high yield's too high. Got the wrong stocks pushing the market. We got growth stocks, not value stocks. And boom, the market drops. 30%, the fastest drop ever in 4 days. Then they said, we got to get this market run back up. Got to get it run back up. They went in with like, I don't know how many trillions and trillions of dollars and bought more bonds, and got that yield down from 155 basis points down to about 55 basis points. Everybody jumped in March, and remember, it captured back. This was the fastest crash, and it went down in 3-4 days, and it recovered in about 2-3 weeks. We've never seen that. Why? Because they got the yield so low, down to 55 basis points. Everybody's buying it, okay? And now the market's starting to run again, right? Boom. Now where we are. Now we're in real trouble because the yields are too high. Please understand what I'm trying to tell you. But that's okay. You can go with the cycle as long as they want to keep doing this, and they do want to keep doing this because the rich get the money. This is where they get money in tech stocks. They don't get money. They get money in growth stocks. They get money in these tech stocks. They don't make a lot of money with GE. They don't make a lot of money with Ford. No, this is the exciting place. But the problem is, you can't keep the stocks going up because the yields get too high and there's no real value in the stocks. So that's why they keep crashing the stocks to reassess, to get the yields back down, to push them back up. So that's great because we made a lot of money since 2008 because we ride them up. But my gang knows when to get out. And my gang knew when to get out in 2018. They knew when to get out, take their profits. Then they knew when to get set up and short it. So when the market dropped in 2018, they were making money on the way down. They knew when to get back in 2019 when it ran from 2019 to 2020. But they knew when to get out in 2020. But better yet, they knew how to short it. So when the market dropped 30%, they made money on the way down. So on the way up, if the market went up 40%, they made money on the way down when the market dropped 30%. Now they made money, big money, after the crash, after this market dropped in March of 2020, February to March 2020. I thought it was March 2020. The market has gone up nuts. Remember, though, the reason why, because it was only 55 basis points. That was the yield. Everybody was in there buying tech stocks left and right. So now we're ready for another cycle. We're ready for another crash. So look, just join my gang for 10 days, And I swear, when you join the game for 10, you're going to say, this is really easy. This market's on a pure cycle. As long as they keep doing this, as long as they keep doing QE and keep printing money and keep buying treasury, keep interest rates low, that means every time a stock goes up, whether it's Facebook or whatever one, and interest rates start going up, yields going up, it's going to stop. Because the market can't support high yields. What supports high yields? What supports high yields is your value stocks. And when value stocks have great earnings, guess what? They let the yields keep running. The bond market lets the yields keep running and running and running. And that's how you build great markets and great economies. But the 1% didn't care about that in 2008. Please join my gang, and then you don't care which way the market goes. And please help St. Jude when you do make money. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to